Welcome to Dow Stock Talk, where I talk about topics relating to investing and finance, but more specifically, the stock market. Now, in this video, we're going to be going over Amazon. Is it a buy? Alright, and before we get started, make sure you smash the like button because it helps the YouTube algorithm. It helps YouTube know that this is quality content and help my videos reach a broader audience. So the good thing about this video is I provide a timestamp so you can skip around if you like. Alright, so let's get into it with Amazon. Who shops at Amazon? I mean, who even orders stuff from Amazon? Wait, hold on. That's Amazon. And who would even use Prime anyway? I mean, no, I'm playing. To me personally, Amazon is one of my most favorite companies, and if the stock was to ever go down in value, I would definitely fill a lot of my portfolio with Amazon stock. Okay, I just wanted to make this known that I am not a financial advisor, so this video is for educational and entertainment purposes only, so make sure you do your own research. So the structure of this video, I'll be first talking a little bit about Amazon, be going briefly over their earnings and revenue, then I'll be talking about their risks, competitors, and then I'll be taking a little deeper as far as the Amazon and their financial details. So these are the things that Amazon primarily focus on: e-commercial, which is online retail, cloud computing, digital streaming, and also artificial intelligence. So if you have Alexa, you might want to watch out. No, it's just a joke. Okay, so the first thing I like to go over is how the business makes money. So 50% of Amazon revenue came from online sales, which is, expected. 19% came from third-party sellers. 7% came from Prime. 6% came from physical stores. 13% came from Amazon Web Services like cloud computing, and 5% was others. For 2016, Amazon produced $2.37 billion. For 2017, Amazon produced $3 billion. From 2017 to 2018, they went from $3 billion to $10 billion. For 2019, they went for roughly about $11.5 billion. And for 2020, they already surpassed $7 billion, and we still got the third and fourth quarter to go. So I definitely think they should at least make $14 billion. Yeah, just wanted to make note of some of the companies that Amazon purchased over the years. Some of them, the most recent popular one that everyone probably would know of is Whole Foods Market. They have Twitch, Ring, Audible, Zappos, and also I wanted to show on the screen Amazon top suppliers and also Amazon top customers. Now let's talk about Amazon competitors. Now for the competitors, because Amazon is a big business, I like to look at their competitors as far as their stream of income. But generally, you can say that competitors is any online presence that would end up having to buy online merchandise. Competitors that you can end up thinking about is Alibaba, Overstock, eBay, Shopify. Anyone that has a platform that you can buy and sell products would definitely be a competition for Amazon. But as far as the cloud computing based artificial intelligence, they have a steep competition as far as Google, especially with experienced companies as far as Oracle, Microsoft, IBM, even Facebook. There's the artificial, as far as cloud computing, which would be categorized under Amazon Web Services. As far as even the subscription business, they got a really competitive one. Because you have Google's, Netflix, Apple, and for the physical stores, they also, have big competitors such as Costco, Walmart, Target, all those big things. And as of course as the online retailing, this can be extremely, competitive once you got up and coming companies like Etsy, Welfare. They also have the already bigger ones as the Alibaba, eBay, Shopify. So it's a very competitive market. I think, it's not going to be easy. One of the, I want to say Amazon's biggest competitive advantages is they offer competitive prices for almost anything you can potentially think of. Now, of course, some of the risks, steep competition. Will they be able to still have the best prices? Anything relating to foreign policy changes or anything relating to tax law, increasing taxes, or, upping shipping prices. All these things could end up affecting the business. Now that that's said, let's check out Simple Wall Street. Now let's jump into Simply Wall Street. I normally like this site because it gives you a lot of information. It's like give you a snapshot of a lot of information about the company. So okay, let's just check the 5-year stock price of Amazon. As you can see, the stock has been increasing nicely over the years. And if you see during the pandemic time, the stock price was roughly close to $500, and after that we seen a high of about $3,500, and now it's actually the 22nd now, so it's about $3,000 a share currently. So now, as we can see, the one year returns for Amazon is 79%, regular online retails, which is 59%. One of course the volatility, as we look, the volatility is going to be high. As far as the validation perspective, their price, it's saying it's a little overvalued, but of course for a popular company like Amazon, with markets and validations being relatively pricey, it's not compared to the other tech companies, big companies. It's a little overvalued, but for a company like Amazon, you're probably going to have to pay a premium. Of course, if you can get it within, that close to that 25 or 2600 price range, that would be way to go. But I think the best thing to do, and this I guess will answer the question to the video, I would just buy Amazon in small increments, $3,000 a share. So I probably would use the fractional share platform. Once again, I'll drop them in below. And just if I was planning on how to invest, $1,000, I would just do each month $100. So therefore, that way you have a great company, great fundamentals, and if you're looking at it from 5 to 10, 15 years, like you'll see a very decent return. That's my personal opinion. Now, if you're looking at the future growth, is Amazon is projected for the future growth. This is by like 47 analysts. They expecting that their earnings to grow over 32% per year. Just give you a visual image of just the revenue, then the earnings, and then the free cash flows, just to give you an indication of that. Far as analysts' future growth, it's supposed to keep up with the industry. Amazon's 32%, the industry's 32.7%, and the market's 23.1%. As you look at the forecast earnings revenue growth, I'm not really that much concerned about that, because to me earnings, I take earnings over revenue growth any day. Now if you also want to see, as you can see, their earnings growth or earnings per share is supposed to increase dramatically over the years, so that's always good to see. And this is a big one, that future return on equity. Future return on equity is forecast to be 23.1%, which is really nice. The historic average, the historic return over the past 5 years was 51%. I just wanted to go over the past earnings. The past earnings was 51% compared to the industry, which is 23% compared to the market, which is 13%. Of course, well, the return on equity as of now, it's 17.9%, which is they consider a little bit on the low side. And I just wanted to highlight, of course, the financial health. I normally love to see companies whose assets can cover the short-term and long-term liability. So that's one great thing about this. Now they mentioned that the Amazon, as far as the debt to equity ratio, they can consider it a little high, but for companies like Amazon, I wouldn't worry about this at all, because look at this. You see the equity, you see the debt. Now check this out. Look at the amount of cash they have. Boom, look at that. They have just as much cash as they has equity. So the debt concern to me is not that big of a deal. I think Amazon is doing a wonderful job of leveraging debt to get future gains. So I don't even really worry about the debt concerns. And as you can see, if they really wanted to pay off their debt, they reduced their debt to 80% to 47% over the last 5 years, and they can cover the operating cash flow and the interest fairly well. So they have a strong balance sheet. Dividends, because it's a growth stock, you don't have to worry about that. But I also just wanted to, they have a experienced management team, And as well as I want to show you that 60% of the outstanding shares is owned by the institution, 26% is owned by the general public, and then you have roughly about 15% is for individual insiders. So my personal opinion, if I'm looking at, of course there could be other investments that can bring you a higher return, but just looking at Amazon individually, I think if you dollar cost average this kind of stock, especially if you have a longer time frame, you can't go wrong. And that concludes this video, but make sure you let me know in the comments below, what do you think about Amazon? And if you haven't already, make sure you hit the like button, and if you're new, don't forget to subscribe to my channel.